All right, welcome to another live stream. We're going to be doing a full trading session this morning. I've got my tier 1 trading guys here with me, and we're bringing in the broader audience as well, going out to Instagram, my Facebook group, YouTube, Twitch, Periscope, and you guys can feel free to come in and join the discussion. I'm going to be going through 8 currency pairs, as we always do. We're in a few trades already, so I'd like to share with you. If you stay and watch this, I'm going to break down each of those trades, and I'm going to be talking about why we're in them, how we got into them, and how they're doing. For those of you who are enjoying these live streams, make sure that you let us know. Make sure that you give us a thumbs up or some hearts or comment. Let us know how you're receiving these live streams, if they're well received, because, well, we don't want to do stuff for the sake of it. We only want to share this if you're getting value. But we were just saying we think it's important because there's a lot of people out there that can run into some costly and timely mistakes that can set them back literally months, years in their trading. So by inviting the broader audience in, it just gets us talking about what's happening, the right way about going into trading, the right approach to trading, and all that stuff, all the good stuff. So if you're enjoying it, definitely show us some love, definitely hit the like button. And if you're watching this on YouTube, if you're one of the YouTube subscribers, definitely make sure that you go down to the notification bell, hit that, and if you're not subscribed already, do that as well. So who we got here this morning? Let's have a look. We got Adam, Chris. Good morning. The live streams are really helpful. Thank you. Doing this again. Live room's awesome. Keep doing your thing. Excellent. It's good that you're getting value from it. So how many pairs do you usually trade? Major pairs, minor pairs. So on my swing trading account, I trade a 27 pairs. Okay. That sounds like a lot, but it takes me around 10-15 minutes a day to scan through those. When it comes to my intraday, this account, I'm only looking at 8 pairs. Okay, so that's the deal. But you can just trade one pair. You can trade one pair with multiple strategies. You can trade, 27, 28 pairs with one strategy. It really doesn't matter. It's whatever suits you. Good morning, good morning, good morning. Can we look at LTC today? Yeah, if I remember, we'll take a look at LTC. So it looks like you're enjoying it anyway. It looks like you're getting value from it. So as I say, we're going to go through the pairs in the same order. I've got my tier 1 trading guys here who are going to contribute as well. I know Adam Logan has a few setups on the radar, so Adam will be sharing some ideas. What else? Oh, so for those of you who are enjoying these streams, whoops, there you go. We've actually got the Ninja Trader set up here on my work desk. Obviously my trading station over there is my main trading desk. But what we're doing is we're setting up the Ninja Trader on this desk as well so that we can take the trades on here, and I can show you guys some variation in different platforms and how we actually execute the trades. I'm using TradingView for this particular one purely because that's what we've got set up here. It was easiest to get this stream running. But this account, I'll be mimicking what I'm doing on the Ninja Trader accounts. But this is kind of just for your demonstration so that I could stream it to you guys. So we're using a TradingView platform. If you want to follow me on there, you can. If you want to follow along, you can do that as well. Hope we can look at NASDAQ. Hi guys, happy post Euros morning. Yeah, well done England. For those of you who don't know, England beat Germany. So that's pretty cool. So we're going to get stuck in. I'm going to bring on, morning Paul, Mia, Adam, how you all doing? So what we're going to do is we're going to go straight over to this. Let's remove that. So now you should be able to see the chart and we've shifted the little camera of me to the right hand side, and we've put the chat up where the watch list is. Okay, the symbols up the right hand side, the watch list, we've moved the chat to there. So some of you guys were saying we can't see the charts because the chat's in the way, so we've moved that across now. So hopefully you can see that now. Jason, can you just show us a bit of your setup? Yeah, so look, this is it really. We've got the I've got my trading desk over there. So this is my main trading station where I'm running NinjaTrader. We're running NinjaTrader here on a Parallels on a Mac, okay? And I'm using TradingView just for you guys to show this, to do this live stream. And then I can't show you over there at the moment, but over there I've got my, I have my stock screeners up for the best part of the day. I also have some news on over there as well. And that's about it. So yeah. Wow, that chart looks beautiful. Awesome setup. You're going to make at least 40% per year with such incredible line drawing on a chart. Yeah. Hi, Jason. Is your NinjaTrader account using an English broker or an American broker? English broker. Who is the lad above your dollar bill? That's the stonks thing. I got sent that by a company called U2s. And it's I don't know if you know the stonk meme, but it's that guy from that thing. Goldman Sachs should sign you up, seriously? Yeah, man. I wouldn't fancy working at a trading desk all day, though. That's not really why I got into trading and investing. Let's catch these pips. Cool. All right, let's get stuck in then. So we're going to go over to this TradingView platform so I can show you guys. We are looking at currently the Aussie CAD. Now we're going to go through the Aussie CAD, Aussie dollar, euro dollar, pound Aussie, pound yen, dollar yen, and we're going to finish up on the New Zealand dollar, and we're going to work through those 8 pairs. And we're going to use multi-time frame analysis, so top down, daily time frames. Then I'm going to go down to my first trading time frame, which is the 4-hour, and then I'm going to go down to the 60-minute time frame, which is either my lower time frame for my 4-hour, but I can also trade on the 60 as well. So I can trade multiple time frames based on my testing. I trade on the 4-hour and the hourly. I used to trade on the 5-minute and 15, but I haven't for about a year and a half, just because of how I dynamically shift my focus within my entire investing portfolio. And by the way, I'm going to do a video on that because I got a question about living on trading returns. And I want to show you how I manage my entire portfolio and how I shift money around depending on 1, opportunities in the market, 2, performance, 3, my agenda, my objective at that period in my life, and how I maintain a certain income and how I shift liquidity around my entire portfolio based on still maintaining that income. So if that would be valuable for you, let me know, and I'll do a video on that, because a lot of you, you see the trading and you think that's it. There's a lot more to it in my personal investment portfolio. So if you want to see that, happy to do that as well, give you guys some ideas. Why do you prefer dark background? I prefer the dark background purely because of my eyes. I spend a lot of time looking at charts. I like to have anti-glare screens. So you guys will see on this here, I've got a screen that goes over this, which is an anti-glare. This is anti-glare. They're all anti-glare screens over there. You can probably tell by this here. So yeah, I prefer anti-glare, dark. I use dark mode for everything just to put least strain on my eyes, because when I got into trading, that was for the first time in my life when I had to wear glasses, which is something that you just don't anticipate when you start thinking about trading. It's not the glamorous side of trading. If there is a glamorous side of trading, I don't really think there is a glamorous side of trading. Hello, Jason. I'm a student at Tier 1 Trading. Excellent. Welcome. So, so we're going to go through these 8 pairs now. Has anyone got any questions or any setups they want to look at? You know, if you've got any questions or setups, or maybe you're practicing, maybe you want to look at a setup that you've been eyeing up in the market, let us know. If not, then we'll just get stuck in to the markets. I'll give you a few seconds to respond before we get stuck in here. Hope you're well. Hello, Shah. How you doing? Dollar CAD. Let us know euro dollar. There's a few of you typing in. So bullish rotation on LTC, dollar CAD, back pattern sell at key structure. Right. If you're typing in an idea, please provide 4 pieces of information so that it makes it efficient for us to go straight to that and have a look, right? So we want the market, so the pair, the time frame, the strategy. So if you're using a Elliott waves, or equal measured move, or maybe you're using a flag pattern, maybe you're looking at an ascending channel or a bat pattern, something like that. Give us the strategy, and then also the 4th piece of information is that the start of the impulse for that setup. So either it's a flagpole, either it's a initial top of a double top or a double bottom, if it's an X point for an XABCD. Try and share those 4 pieces of information. Otherwise, what happens is Dan will say dollar CAD, and I'll say, oh, cool. What are you looking at? I'm looking at this pattern. Oh, okay. What time frame? 4 hour. Oh, okay. Where's the, and it's kind of this back and forward. We want to get into this efficient communication that allows us to really quickly switch between the pairs so that we all know what we're looking at. Overall thoughts. Euro, yeah. Oh, okay. So you want overall thoughts on dollar CAD. Fine, thanks. Excellent. All right, let's take a look then. So let us know where you're watching this as well. If you're on YouTube, Twitch, Twitter, Periscope, Facebook, Instagram. I think we're on Instagram. Let's just double check. Yeah. Yep, we're on Instagram. Cool. All right. Have you heard of NNFX? What's your thoughts? Nope, haven't heard of NNFX. What are they? YouTube. I see you have an EMA on your chart, but you don't teach about them in Tier 1 course. Yes, I do. Yep. Yeah, we teach the daily chore strategy, we teach the daily reversal strategy, we teach the trend continuation strategy, daily chore and the reversal both use the EMAs, and that's all taught inside Tier 1. In the mastery section. All right, so let's have a look at some of these pairs then. So the Aussie CAD. Is anyone looking at anything on the Aussie CAD? We've been, remember, by the way, guys, this is, it's non-farm Friday, this Friday. If anyone doesn't know what that is, it's the most consistent fundamental news release that comes out monthly that has the kind of most consistent impact in the market. It creates some movement in the market, and it's out of all of the news releases there are, that's the most consistent one that causes a reaction. And if you guys have seen that, I mean, it doesn't seem to have, Caesar says daily chore is a life-changing strategy. Yep, well, I'm going to go through that today. So if you guys stick around, we're in a daily chore trade on 3 pairs. I'm going to go through that step by step with you guys. So there you go. Then you got no excuse. You can go and test it, and then you can see. We're going to go through that. NFP, or non-farm payroll, is last on June the 4th, that was the last time we had NFP, and this is what happened, right? We were looking short on the Aussie CAD and the Aussie, like many of these pairs, right? And then what happened was on NFP day, which is the 4th of June, we just rallied straight back up into where market left off, and we've been consolidating ever since. So this big pullback candle here was all caused by NFP, and since then we've literally just been moving sideways. So if you tuned in last week to the session, if you tuned into this session last week, you'll know that the Aussie CAD hasn't really, it hasn't really done anything. We're still at the same, we're still in consolidation. So what does that mean? It means that our approach is the same, because if we can identify consolidation, then all we can do for a prediction is predict consolidation. Unless it's a flag pattern that's likely to break out one way or the other, then you can make a prediction for a breakout. But for my style of trading on this particular pair, if I identify consolidation on the higher time frame, what I'm predicting is further consolidation until price shows us otherwise. Either a new structure low, which means we're likely to push towards the downside, or a reversal here of some sort, right? And then a look for a confirmed trend to the upside. Until we get either of those signals, I'm only looking for consolidation setups, which means if I don't have a consolidation strategy in my playbook, I can't get involved. There's no way that I can get involved. Now, it just so happens that on the Aussie CAD, I trade certain consolidation strategies. So in other words, there are times when the market's moving sideways where I can actually get involved with trades. So I can make money when it's moving sideways. And that's really, really important, because the Forex market is in some form of consolidation about 70 to 80% of the time. So, if we're in some form of consolidation 70 to 80% of the time, what we want to do is definitely have a setup for consolidation, ideally, unless you're okay with fewer opportunities and you just look for trend, and that's absolutely fine. But if you're looking to get a lot more opportunities, it makes sense to have a consolidation setup. Jason, do you trade during major news releases? And is that something you considered while you're backtesting? Yes, I did consider it while backtesting, and no, I don't trade during major news releases. But remember, what is consistently profitable trading all about? Does anyone know? What's the most important thing to become a consistently profitable trader? Let me know. Let me know. Let me know in the chat. What do you have to do? What's the most important component to your trading if you want to be consistently profitable? Anyone? Routine, habit, close, yeah, it's the same thing. Michael says consistency. That's it. The clue's in the title, right? Clue's in the title. If you want to be consistently profitable, you have to be consistent. So when it comes to rules, you can't just say, I don't trade during high impact news releases. What do you have to do? What do you have to have in your plan to make sure that that is absolutely consistent every single time? What do you have to do? You have to have rules around what that is. Well, what is the high impact? What do you consider high impact news releases? What ones? Okay, and then not only that, when do you stop trading and when do you start trading? And you have to have those rules in your plan, because if you start deviating and you start having kind of a murky water and then, oh, sometimes I do, sometimes I don't, then what do you lose? You lose consistency, and then you lose consistent profits. So a rule is there for you to follow. It doesn't matter if it's the best rule, because that's how you build discretion and you tweak and optimize. But you have to have a rule, and it's a bit chicken and egg. You have to have a rule so that you can start somewhere. And whether you go and test that and then find it to be, well, actually I could do this bit better or that a bit better, or squeeze a bit more profit out this way, or tighten my stops here, or give my stops a bit more breathing room here, that's rules that you add later. And then you can add them in and then tweak it and refine it, and then but the point is you have to have a rule in the first place. All right, and to find that rule, you've just got to start. To find the best rule, you've just got to start with a rule. Make sense? I hope that makes sense. Because a lot of people say, well, I don't know what the best rule is. What rule do you do? What rule do you do? You just have to have a rule. Like even even how long you look for trade setups. So you might, for instance, there's a minimum zoom that I'll take my candles down to, and it's a 264 candle length across the chart before I discard a trade setup. So in other words, a trade setup can't be over 264 candles with my zoom at my zoom 4, okay, which is the minimum zoom. So that's a rule. And then what does that do? It allows you to do that every single time. Does it mean it's the best rule? And does it mean I'm going to get the most profits that way? No. But you have to have the rule there to make sure that you're doing the same thing every single time. Right? That would make a great pick on the wall. What's that? What's that, Rob? Hello to everyone that's joined us from Twitch. All right, so we're going to go to the daily, and you can see that we're consolidating. We haven't violated this low where we had these tweezer bottoms. See these tweezer bottoms here, right? Haven't violated that low. That was non-farm Friday. I remember this because this was the day I went to Portugal. This was the second day that I was in Portugal, and I was watching non-farms from there. Saw the market push back up into where we left off. Oh, coffee. And what happened is we ended up just moving sideways. So we've moved sideways for the entire month. This is the whole month. This Friday is non-farm Friday. Okay. Now, if we drop down to the 4 hour, and this is how I'm going to run this, we drop down to the 4 hour. Whoops. You can see very clearly this consolidation here. Now, what can we use in consolidation? Some of you trade advanced patterns. So some of you are looking at taking advanced patterns, X, A, B, X, A, B, C, D. This would be a butterfly setup. I don't trade butterfly patterns, but I did meet a trader in Las Vegas who works at a prop firm who just trades butterfly patterns and does phenomenally well. So I don't trade butterflies because I didn't test them. I had an issue with the structure-based stops. But if you are a pattern trader, there's some other potentially other opportunities in here as well. X, A, B, C, D. Okay, you could have got into the bat pattern here, which hit targets. And in this, you're looking for those consolidation setups, whatever they are. Okay, so whatever type of setups that you take, that's what you're looking at in here. What I think's interesting here is this little story here, right? We closed on this candle at 93.29, and when the market opened, we opened all the way down here at 93.06, so almost almost 30 pips of movement, and then we closed around where we closed before. So what we normally see here is a push to the downside. So my bias, although it's bearish, it's just based on discretionary analysis. It's not based on something that I've got documented as a trading strategy. There's a massive difference between that. Why don't you trade crypto instead of Forex? I just don't. I'd need to test the plans and go and do a load of back testing. And for me, it's just a little bit too young. That chair you have, Jason, looks good. This is my new Secret Lab chair, Titan. I highly recommend them. They're very comfortable. Cool. So this is something to pay attention to. If you drop down on the 60, you're going to see it's the same there as well, right? Bless me, just had to sneeze. We open right down here, 93.06. We close lower than we closed previously. What you usually see here is a push to the downside. Now, if you're a pattern trader, some of you choose to ignore these kind of legs for your setups. Again, that's going to be something you have to be consistent about. Or you're just looking at some other form of consolidation setup here. But for me, personally, there's no pattern trades that I trade setting up at the moment. So I don't care about this pair. There's nothing here for me. If we get a crash to the downside and we break and violate this low, absolutely I'd be interested in a short. But until then, if there's no pattern trade setups, then I'm not interested at all. So let's move on to a couple of setups that we can talk about. And now I'm going to show you a little strategy here that we used to involve ourselves here. There's 3 setups, all the same strategy. In fact, it actually played out on the New Zealand dollar as well, but it wasn't valid signal. We took the Aussie dollar, the euro dollar yesterday, and the pound dollar. We had the same like signal, but I took this as a demonstration to show you guys that actually this isn't a valid setup, so we could see how they play out. It just turns out that the one that isn't valid, that doesn't meet the filtered rules, is the one that's doing the best at the moment. But that's, you know, doesn't mean that this won't win money. It just means that, well, it is what it is. But the Aussie dollar and the euro dollar are the ones that met the rules, and I'm going to explain you those rules right now. All right. So any questions? You can watch the replay video later. Yeah, so what happens with... morning, Robert. What happens with these live streams is on all the platforms, Twitch and Facebook and Instagram, you can go and watch the live pretty much straight after this is finished. With YouTube, they take the live stream down and then they process it for about 24 hours and then they post it again. It's not quite 24 hours, but it's near enough. So basically the next day you'll be able to watch this live stream again on YouTube. All right. But anywhere else, if you're following me on Twitter, you'll be able to watch the link. It will just say Jason's going live. You just click that link and the whole recording will be there straight away. I don't know why YouTube do that. I guess it's for, you know, processing and copyright and doing all the kind of advisory checks and the explicit warning checks and all that kind of stuff before they publish it on their site, which is understandable. So look, here's the Aussie dollar, and we're going to take a look at the daily chart first. If you tuned in last week, you would have heard me say about this, right? So in fact, let's do the multi-time frame here. So we had this head and shoulders set up, okay, where we had the first shoulder here, right? We had the neck, the head, the neckline, then the head, then the neckline, then the second shoulder. And then in fact, this was the second shoulder. We bounced off of the neckline again, and eventually we broke this neckline, okay? Broke this horizontal neckline, and then we pushed back up, and look what happened as we pushed back up. Where did we respect? What area did we respect here? Look at that, right? Hit it like a wall. We run out of steam. We put in this big bullish momentum, bullish candle, bullish candle, bullish candle, and then whoop, big high test candle, right? Now, what you'll notice here is as we approach that level, let's zoom right in so you can see this. First of all, as we started to push down, can you see how these moving averages crossed over? So we've got the 8, the 20, and the 50, and they start to fan out here. They start to fan out really nicely, which indicates momentum in that direction. Now, as we pulled back up, we're looking for the optimum place to sell the high. Obviously, selling the high and buying the lows is not reality, okay? You're never ever going to pick the high and sell the low every single time and then sell the low, buy the high. You're never ever going to do that every single time. But what we're doing is we're trying to do that. And we're trying to get as close as possible, and we're trying to build rules around how we can do that consistently. So the daily chore is this signal here, this candle here that has touched this 8 moving average and has opened and closed in the lower third of the entire candle body, okay? And we've also had this 3-bar reversal in that area, which is extra confirmation, but just so happens that, in fact, we got in a little bit late on this platform. On my Ninja Trader account, I'm in at 75.73, I think. 75.73 or 75.72. But we got in a little bit lower here because I was demonstrating it yesterday to the trading guys. And the order would be about here, okay? 75.72, 75.73. We got in here Extra confirmation with a 3-bar reversal, but this signal candle is what you need. Once you get that signal candle, you want to basically set your sell stop order. And once you set that sell stop order below the low of that candle, you wait for confirmation that market's going to trigger in by pushing lower. We pushed lower yesterday and we've continued down. So this is right at the top, a rejection candle here, where the bulls are pushing up and being rejected by the bears, showing a nice signal that we're likely to see some rejection, a continuation down. It's right at the top of this pullback, and it's right at previous structure support becomes resistance. So fantastic area for a short, okay? Bearing in mind, we've already broken close below this major level of support. We've now broken close below that. We've pulled back. We've found resistance there. We've put in a high test candle wick. We've built rules around that so that if we touch the 8 moving average, which are fanning out across the 820-50, and we open and close in the lower third, and we can set a sell stop order for extra confirmation, and we've got a 3-bar reversal, okay? That's a great indication that we're likely to see a rollover, and that's what we got involved with yesterday. All right, does that make sense? So that's what we did. That's what we did. Now, when we do that, that is a daily strategy. You just trade that straight off of the daily time frame. So when it comes to going down to the 4-hour, I'm not interested because I'm already in that. There's nothing here now that I want to get involved with. If I was looking at any kind of intraday setups, it would again be patterns. And I think Adam Logan was looking at a cipher here. For those of you familiar with ciphers, this bigger one, X, A, B, C, D, cipher pattern. And I think he's in that from yesterday. Structure based, I would be looking down here where this take profit is. So there's still a chance that once, if I can take profit on this, I can look for a little structure based trade down here for a little buy. But that's again, maybe we'll be looking at that tomorrow in the live room. So if everyone's following me, that's it for the Aussie dollar. The pound dollar, in fact, let's go to the euro dollar first, right? So look, this is the same situation. In fact, we had 3 setups. So again, we were pushing down, we had this big bearish momentum. Let's go to the daily. Big bearish momentum. Okay, this isn't as attractive as the Aussie dollar because we haven't broken that previous support level. Okay, it's not as attractive. It's not, in my book, this is not as high quality setup as the Aussie dollar. And that's where discretion comes in because we haven't broken, violated that major support level looking left. We do have support level at 17.14, and we know these act like magnets and price action is likely to test that level. But it's not as attractive as the Aussie dollar. But we had the same pullback, again, not as an attractive pullback. And the way that we trade this setup is we wait for the fan moving averages to go the right way, which they did. They crossed over at this point here. Okay, and then, whoops, at this point here, sorry. They did, and then at that point, we look for that signal again. Now we had one here, which didn't get triggered. Then we closed that order off. We got this one here that didn't get triggered. So we closed that order off. And then we got one here, which did get triggered. We set the orders, right? We set the orders here at 1921 and 1919, and we got triggered in. And we've been rolling over ever since. So this, again, targets, these are a little bit high here. Targets at the low. Targets at the low, which means it's more than a 1-to-1 reward to risk. The Aussie dollar is more than a 1-to-1 reward to risk. So the reward to risk ratio is still not the best that I've seen on a daily chore setup, but I think there was a better reward to risk on the New Zealand dollar. But there you have it. Okay, so we've got a real attractive setup on the Aussie dollar. Euro dollar not as attractive. They're both about the same in terms of where they've moved to. And then we went to the pound dollar, and the pound dollar I just took as an example for you guys because this is a real low quality setup, okay? Because if you look at this, we're in consolidation, okay? We're in consolidation here, big ranging movement. So that's the first thing, right? Do I have a bearish bias? Yeah, potentially, because we've failed to break this 142 level, and we've rolled over. I think we could see some movement to the downside. What's that based on? Nothing. Just me just thinking that, right? So it's nothing that I want to be trading on. I don't want to trade off of what I think. Market doesn't give a damn what I think. So what we're looking at here is the same signal. However, it wasn't valid because the moving averages weren't in the right order. They hadn't fanned out. We were in consolidation. It's a very low quality setup. We had this big bullish momentum candle, and also the signal candle didn't open and close in the lower third. Okay, the actual open of this, the close of this candle was a lower 50%. So there was about a 20% spacing of that entire candle where it was above what I normally look for. So we took this just to show the guys the difference if you're just trying to take every single setup. So this is just an example. Yes, okay, you can see it's $100 in the profit, but that's just, you know, that is what it is. This typically is a lower quality setup, and you can see we're rolling over. Targets again, they're a little bit low there, but again, it's a 1-to-1. It's not more than a 1-to-1. It's pretty much bang on a 1-to-1, which makes it less attractive as well. So the Aussie dollar, we had more than a 1-to-1. The euro dollar, we had more than a 1-to-1. And then the pound dollar, it's a 1-to-1. All right. So we're going to see how they go. That's essentially how we got involved. If you guys have got any questions on that, let me know. Morning, Canary lad. How far are you in the courses? Oh, you're talking amongst yourself. So you start analyzing on the daily. Yeah, it's always best to have in my opinion, it's always best to use multi-time frame analysis because it carries more water and allows you to identify better trade setups, quality trade setups because of the confluence. And what I'd recommend is you have a 3-time frame at least setup or analysis where you look at a higher time frame. And that could be the daily, it could be the weekly, it could be the monthly, it could be the hourly, it could even be the 15-minute as your higher time frame. But what you're looking at is the macro view of the market based on a higher time frame. And then for your trading time frame, drop down 4 time frames. So if you're looking at the daily, trading time frame will be the 4-hour. If you're looking on the 4-hour, trading time frame will be the hourly. If you're looking at the hourly, trading time frame will be the 15-minute. Make sense? And then a lower time frame, again, is 4 times that. So for a daily 4-hour 60, right? Or a 4-hour 60 15. And the purpose of the 15-minute or the lower time frame, whatever it is that your free time frame analysis is done on, the purpose of the lower time frame is for order execution, okay, to get in a bit earlier, to give you them opportunities, and trade management and trailing stops and stop loss management and things like that. All right, so you can use trade management and entries for on the lower time frame. Use a trading time frame for your normal setups and getting involved and deciding where to get involved. And then your higher time frame is going to give you that identification phase and the prediction, allow you to set a prediction and form a thesis of what's likely to happen. And then you base all of your trading decisions off of that, because that stops paralysis by analysis. So many people, if you looked at any chart, I can tell you this now, you will find a reason to get long and a reason to get short. You can find a reason to get long and a reason to get short at any time in any market. I promise you. So what we want to do is eliminate that paralysis analysis. We want to be able to just identify, form a prediction, a daily prediction. This is where I think the market's going today, down, up. That's it. Then only look for setups in that direction. Okay, until you get confirmation that changes your thesis on the higher time frame. That's why we use the higher time frame, because if you're changing your decision-making process on the trading time frame or lower, you're going to be changing it all the time. You know, you can go bullish, bearish in a trading session on the 15-minute or 5-minute time frame. Does that make sense? Whereas on the daily, it stops you fluctuating, or the 4 hour, it stops you fluctuating because there's less noise and you need extra confirmation. You're placing trades in a direction that you're predicting and you're sticking with, which allows you to maintain consistency and not chopping and changing too much. Carmen says, let's say I want to test a trend following strategy using the 4 hour to identify a trend and M15 for execution. Would there be the need for me to look at the daily? No, not necessarily. If you're using the 4 hour as your trading strategy using, so if your trading strategy is on the 4 hour, I personally wouldn't be using the 15-minute time frame for entry. I'd probably use the hourly. I would try and use the hourly, because if you go any lower than that, you're going to start looking at lower quality entries. Does that make sense? Because you can get a double top. Let's just say, for instance, you're looking at a, phase one, you've got a new low, and then you're looking for a pullback, and maybe you need like a little 3-bar reversal on the pullback. Okay, so maybe you need a 3-bar reversal on the pullback, and then what you're doing is if you're dropping all the way from the 4 hour where you've identified your pullback zone to the 15, you might get a 3-bar reversal, and then price pushes up and get another 3-bar reversal, then price pushes up and gets another 3-bar reversal. So you could have this going on the 15, which gives you lower quality entries. Whereas if you're on the 60 and you wait for a 3-bar reversal, that's going to have more power. Does that make sense? Hopefully that makes sense. Let me know if it doesn't, because are you still in West Sussex, or did you move somewhere else? Yeah, I'm still in West Sussex. Yep, still in the same place. So what we're going to do now is we're going to take a little break. We're going to come back to the pound Aussie, pound yen, dollar yen, New Zealand dollar after the break, and grab a coffee, and I'll see you guys back in the live trading room after the break. So see you in a minute.